Hey everybody, Rick Mount with Paradigm Mortgage Group. Hey, bringing you this week's market update. So it's Tuesday, February 5th, and I'm happy to say so far I've survived the sequestration. So, hey, I thought it'd be interesting. I found this graph the other day. I thought it was pretty good depiction of really what that sequestration was. But if you look right here in the light blue column here, that is the projected debt, and then the debt after the sequestration. So you can see 2012 was flat because it didn't take place, but 2013, boy, there's just a little notch there. 2014, 2015, you can see the common theme here as we roll up. The sequestration is not that significant of an impact. Yes, it does have an impact on many people, but in the scheme of things, it's a minimal impact as far as the entire economy is concerned. Just to get you an idea, to put things in perspective, the government's sequestration or automatic spending cuts were $85 billion for the year over the next 10 years for a total of about $1.3 trillion. To put that in perspective, the government is currently spending $85 billion a month on mortgage-backed securities and treasury notes to keep the rates low. So it's always good to have perspective. But with that being said, let's look at what's going on with the market. Here's our Chinese candlestick chart that shows how the mortgage bonds have traded over the last 3 months. So you can see we're definitely off of our lows back here. Lows for interest rates is when the mortgage-backed securities are trading really high. So you can see we're definitely off of our lows there over the last 3 months. However, after the last 1 month, you can see we've had a little bit of a roller coaster ride here, but mortgage-backed securities are starting to show some strength, and they're trading in a really narrow range. So if you see this red dotted line right here, that's a floor resistance, and you see the red dotted line up here, that's a ceiling of resistance as well, and a floor support down here. So really, in the scheme of things, mortgage-backed securities are looking pretty healthy. The government's continuing to buy them. That should continue to keep rates low. What the market is concerned about over the next few days really is going to be more in relation to how the administration, the Republicans and Democrats, can figure out how to avoid the next part of the fiscal cliff, which is going to be March 27th, because we're on a temporary spending budget right now, and it's going to expire March 27th, which in theory could shut the government down. So the good news is that the House is going on vacation for their Easter recess, and only have 13 more days to get this done. The Senate will hang around for a couple more days. So really the deadline's more March 21st, 22nd. So we'll see how that did. Here's what's in store for the rest of the week. We had the ISM service sector indicator out today. It was favorable, showing signs of growth in the economy. The services related industries have grown the most, and it's seen significant growth over the time, so we'll keep an eye on how that's going. The rest of the week is really about labor and unemployment. As you can see, we have the ADP unemployment estimate right here. Gosh, guys, that's kind of a weak estimate. We don't put a whole lot of stock into it. They haven't been right very often, but it is a leading indicator of what we look at. The bigger one is the weekly jobless claims down here on Thursday. That's going to have a big impact. People are saying 170,000 jobs being created. And then the monthly employment data, that's the one where we kind of get everything else rolled up into it to see how things are going. So I think we've got a lot of stuff going on right there. Our lock advice, hey, we're floating cautiously. We think there's some room for a little bit of improvement in the rates, but quite frankly, we don't think that they are going to go back much. We think they've come off their lows, and we're starting to trade in that area. So like I said, we'll pay attention for this very closely for you, but if we can help you in any way, you have any questions about the interest rates, how they affect your affordability, and what a refinance or a possible new home purchase could look like for you, we'd be happy to help. Give us a call. Check us out at mikeandrick.com. Thanks.